Hello, everyone. Welcome to the January 31st. I almost did it again. For the most observant people on the call, I messed up the date on the agenda. It's not the 31st. Welcome to the January 30th edition of the Scientific Governance and Risk Meeting. My name is Richard Brown. I'm the head of community development at MakerDAO, or at the Maker Foundation, actually. Today we have a brief agenda, but there's going to be some interesting things happening. LongForWisdom is going to talk about or give us a recap of governance at a glance, and a new segment I'm hoping to convince him to do, which I'm going to encourage him to call a very special thread. So perhaps we'll talk about a very special thread today, and so we can dig into some of the issues that we see happening, or surface some of the issues that are happening in the forum, because as we all hope, there's a fantastic level of activity in there, and we need to, one of the challenges we're going to have to deal with as a group soon, if not immediately, is how do we make sure that and momentum doesn't get lost in the sort of tidal wave of activity that we have going on there. So we'd hoped for the longest time to see a lot of engaged and intelligent actors arriving in the ecosystem and using the forum to implement change, and now they're doing it. And so we need to sort of optimize about how to make sure that that momentum is not lost. Mariano Conti is here. There's no need to introduce him any more than that. We all know who Mariano is. He's dreamy and he's the king of crypto. He's going to tell us about surplus auctions. I'm looking forward to that because I'm still slightly confused about the mechanics involved and the implications. Vishesh is here. Will be giving us a review on the state of the pegs. And what I want to do is I'm going to take my usual speechifying and philosophizing and leave that towards the end of the call, because I want to, what we've been doing in the past is I throw out a lot of hard questions, and then I crack under the pressure of lack of immediate response, and then we move into special segments, and that kind of interrupts the flow, I think. So at the end of the call, towards the end of the call, I want to talk about some major threads, some topics that we've been discussing in these calls that require more than just a sort of a one-off mini debate. My suggestion is, why don't we talk about shutdowns and fees? Why not? I think there's something to be explored there. And you notice that I said fees and not tax, the parameter tax. And so what I would like to talk about, and maybe I can just get people thinking about this now, is that we've been talking about implementation, and I'm not convinced that the ecosystem or the community has aligned on intent, on the requirements that they're trying to satisfy here. And so we talked about this a bit at the end of the last call. I want to pick up that thread. What does the governance ecosystem want to optimize for when it comes to shutting down SCD? Are they optimizing for punishing of free riders? Are they optimizing for rewarding of good actors that followed the policies and procedures and rules of the system? Are we, there's lots of challenges that I want to just throw out there, and hopefully without steering the conversation, but here's some of the things that I've seen too, is that we have a situation that needs to be sorted, and we looked around for a tool to do it because we needed a wrench to fix this problem, and all we found was a hammer, and now everything looks like a nail, to use a well-worn analogy. So I want to make sure that we have the tools that we need available to us, and if not, do we need to find tools? Or anyways, there's discussions to be had here. Let's figure out what the community wants to optimize for, and let's figure out what the plan is to optimize for that preferred outcome instead of casting around for immediate line-ins. There you go. You guys know what I'm talking about. All right. What I want to do, though, is make good on my promise to not ramble at the beginning of the call. So I want to hand it off to LongForWisdom, actually, to give us governance at a glance, and then we'll talk to Mariano. Long, are you around?
Yeah, I'm here. Cool. All right.
Is it just me, or are you super quiet?
Am I?
I can't hear you very well.
Am I now?
Slightly better.
I think that's as good as it gets.
Annoyed and
more annoyed. Well, I guess I'll take that. Good. I'll speak louder. Cool. So I'll say at the beginning that the thread I was going to discuss was the one related to SCD shutdown and the tax stuff. So maybe we
Oh,
just
that's
control
interesting.
that at the.
That makes that's interesting. So perhaps we should do you last then. Does that make sense? And then we can just use that as a segue into the Q&A at the end. Does that make sense?
Yeah, we can do that.
All right. Okay. So let's flip the script again. Mariano, you're up. Go. Entertain.
Okay.
All right.
I'm gonna try to share my screen real quick so you can see. This is like latest addition to DAI stats. You're probably not even gonna. Let me see. Can you see DAI stats here?
No, we're looking at the other screen.
You're looking at the other one?
We see
this one?
Yeah, I see the frozen
Zeppelin
version
forum.
of the Zoom.
There we go. Now we see Zeppelin form.
Okay, and now? Still?
Yep. Now we see localhost. There we go.
Okay. Okay. So you should be able to see, hopefully, DAI stats.
Yeah,
and if you go further down, you'll see this is not yet live. This is just a PR that Chris sent like 5 minutes ago. It's going to go live soon. So I'm going to be talking a little bit really quick about surplus auctions. You've already seen these happen whenever you see one of these vault actions. Means that a vault has been liquidated and collateral is put up in auction. That's we're already familiar with this. We've seen almost 400 of those. But this is going to be unique because the surplus auction is going to be the first of its kind. Single collateral DAI didn't have this. As you're well aware, stability fees were paid in MKR, and then that MKR went to the burner. And you can see here that there's almost 78 MKR available to burn from single collateral DAI stability fees, and anybody can can trigger this burn by just using this burn button. But in the case of multi-collateral DAI, everything happens with auctions. So we're going to be adding this. You'll see that the buffer is 500,000 DAI, and the lot is set at 10,000. So what does this mean? The system keeps a surplus in DAI. This is a safeguard in case black swan happens, or there's a lot of liquidations and there's not enough. The auction. The system is set at 500,000, and we're currently at 481,000 and increasing by the block, as you can see. So the moment this one hits the buffer plus the lot, so 510,000 DAI, this little button will change. Right now it says debt must be healed because you cannot trigger a surplus auction if there is debt in the system. So first, the system must be healed back to 0. And if anybody's looking at this right now and they call the heal function, this will go down to 0. Maybe somebody will do it. But
can you explain to us briefly, Mariano, what that does, though? Like, what does heal do?
Yes, heal. Heal is something that we have this button here, but it doesn't need to be called even that often unless you want to trigger a surplus auction. What heal does is it reconciles system surplus and system debt. So, and we're hiding a couple of numbers here. You will see that here it says debt available to heal at 364. But if you go up to the fundamental equation of DAI, you will see that system debt is a little bit above. This is 706. That is because there's still some debt in the queue from liquidations, and this debt needs to stay in the system for 3 days before it can be flushed out, and it can become debt available to heal. I don't want to go into details as to why, but just know that when a vault gets liquidated, that goes as debt to the system that needs to stay there for 3 days, and then it can be flogged. That's the name of the function you call flog, and it turns into debt available to heal. And when you call heal, it'll take, if it cancel out debt. Suppose that there was no surplus, that surplus was 0, and this debt starts to accumulate. If it hits 50,000 plus, I believe it's also 10, but I need to check exactly how much it is. It would trigger the opposite of a surplus auction, which is a debt auction, in which case MKR would be minted. This hopefully will never happen as long as everybody here correctly manages, risk and governance. So in this case, what will happen is hopefully Saturday or Sunday, according to the numbers, there's going to be a surplus auction. So it might be a keeper that triggers it, but you will also be able to trigger it from DieStats. So you would call heal to reduce the debt available to 0, and then you'll be able to call to initiate a surplus auction. And what will happen? There's going to be 10,000 DAI available, and the system is going to say, hey, I'm going to sell 10,000 DAI. How much MKR do you offer? And this is when the auction starts. Somebody's going to bid a number, and hopefully somebody's going to bid a little bit more and a little bit more. And the system will try to buy as much MKR as it can with those 10,000. And whoever wins, they will be subtracted MKR, which the system will burn. That will be a first as well, because that is different from the burning of single collateral DAI debt. And once that happens, it's another milestone for the system, because it's going to be a first. But after that happens, expect it, I would say, once or twice per week, because you see that this number increases pretty fast. This number can decrease. It can slow down, because right now we have 46% DAI in DSR. If more people put DAI into the DSR, then it seems then there's not going to be as much surplus. It's going to go up still, but slower. So I don't know. I guess this is also an interesting number to watch, and it's going to become more interesting in the coming weeks after the first time, because governance is going to want to see, and I don't want to step on any toes, but okay, is 500K DAI enough of a surplus? Do we need more? Do we need less? Do we want more value going to MKR holders in the case of the burning of MKR after a system, after a surplus auction? And I think I'm rambled enough, so I'm going to leave it at that unless there are any questions.
Sorry, I just want to jump in there. So it's value to the holders potentially in a rational market, but it's also, this represents security to the system as well, right? So this is a resource that's used to recapitalize. Is that true?
Yeah, it is
Your connection is really unstable, Mariano, so we might be losing you if you're still talking. So what do you say, SRs? What was that?
Sorry, you're asking about the DAI surplus?
Yeah.
Can you repeat the question?
I just want to clarify, because as Mariano said, that this represents potentially like an additional value to maker holders too, but there's multiple uses for this as well, right? It represents an additional security to the system for recapitalization. Is that true?
Yeah, I think we've covered that before. I mean, when
we covered it.
There's
lots of people on the call, so I just want to make sure that it's understood.
Yeah, I mean, I think Mariano covered it in this call. Anyways, yeah, when you have under collateralized CDPs that need to be that don't recover all of the DAI from the collateral auction, then it will start to dig into the surplus before it triggers a debt auction. So it's kind of this like intermediate layer. So you can kind of think of it first line of defense is the collateral, second line of defense is the surplus, and then the last line would be the MKR dilution.
Right on. So there's this isn't, like you said, Mariano, this is the first time it's happened, so that's interesting. Do we have any, how do we see the success, or like, I guess the efficiency of the surplus auction? Is there some mechanism we can, probably not, right?
Yeah.
So what is it?
Well, this was, if you can hear me, this was going to be my next plug. It's called dieauctions.com.
What?
It's built by Martin Sanchez, who's a member of the community. And he just released this today. So it's great because it's going to be just in time for the flap auction. And may take a little bit to load, but you can see all of the collateral auctions, the flip for ETH and BAT. And up here to the right, you can see the flap auctions, you know, the DAI auctions with, oh, it says MRK. That's a little bit of a typo, but this is also going to be a good resource.
Oh, amazing. Right on. And this is read only, right? People aren't going to, like, not like in the old days where they can just click a button and try to poach auctions before it's too late.
So, so I have a quick.
Yeah, not in this case.
Oh, sorry, my bad, Rich.
That was it for me. Go ahead, Dave.
Yeah. So, so my quick question to you, Mariano, in regards to the surplus threshold being 500K, and I understand that that's kind of just like that's how it should be, but what are the disadvantages of increasing it to give maybe more of a buffer in the case that like a lot of bad debt occurs in the system? So yeah, what's the disadvantage of making that threshold even higher than 500K? I think I heard Cyrus explain it once.
Yeah, that is more of a question for Cyrus.
Yeah, there's going to be some interesting trade-offs between what that surplus should be. The surplus is somewhat of a more stable, kind of more reliable source of buffer than the MKR dilution. MKR volatility is obviously fairly high and its liquidity is fairly low. And while you can make some, estimates on how much value you may be able to extract through the dilution using various methods, the buffer is significantly more conservative. And so depending on what your estimated distribution of losses is for your collateral portfolio, you may want to have more or less buffer depending. The downside is that the more buffer you have, the more that's held back and does not go to the buy and burn auction.
Yeah, but that's just a floating amount, right? So like it would, like once it's set, once it hits like that that maximum, like let's say it's like 2 million or something. Once it hits that 2 million, the rate of burn is gonna be pretty much the same as it would have been. The only thing we lose is like that whatever 1.5 that wasn't burned. Right. Yeah.
Right, but once.
So it's not like a systemic risk. It's just kind of like either like a business. It's kind of like a business thing for MKR holders.
It is a bit of a subjective decision, but I think once we dive into the details a bit, we'll have some more context. But essentially, the community is going to have to vote on what type of risk tolerance they want for the portfolio, and how much surplus, how much of their tail risk they want to be covered by the dilution, and how much they want to be covered by the surplus, knowing that the dilution is more unreliable.
So then, looking out into the future, and sorry for monopolizing a little bit. So looking out into the future, as the DAI supply grows, it makes sense to scale up that threshold based on the risk appetite, right?
Yeah, as the risk grows, you'll probably want to have more surplus, and there's some quantitative ways to maybe determine the total amount of combined surplus and MKR dilution value you might want for the level of risk in the portfolio. So as long as the combined amount is above the threshold that you're targeting, you're generally okay. But then when you kind of introduce a little bit of a random component to the MKR dilution, you might start to think maybe it's better to hold a little bit more surplus.
Got it. Got it. Thanks.
Sorry, I just wanted to ask, we're also considering in the future using the buffer to pay risk teams or governance facilitators, stuff of that sort. So we
Right.
might want to think about that too.
Yeah, I think in time the buffer can be used to pay out various expenses as well. I think it would just kind of come out of the surplus, and if there wasn't a surplus, it would pop up as bad debt, which would potentially means that MKR would be diluted later. But yeah, in that sense, assuming you don't want to dilute MKR every time you have to pay an Oracle, for example, it would make sense to have a little bit extra budget for these types of operating expenses.
So the float of the system surplus has to be at least the amount to cover system expenses plus enough to compensate for like expected losses that you want to cover with the surplus rather than MKR dilution. Because because if there's bad debt, but there's a surplus, that's not going to cause a debt auction for MKR to be issued. The only time a debt auction is actually issued is if we're running a deficit for long enough, or if there's like a big enough expense that in one shot it completely eliminates all of the DAI in the system surplus, and then also causes 50K plus of the bad debt, right? So if there's like 500K of bad debt because of like a system expense, that's just going to take away from the surplus. Doesn't necessarily cause a dilution, right?
Right.
Yeah. Okay.
Yeah, that's exactly right.
Just to say that whether it's MKR dilution or taken from the surplus, they seem like different things, but in the end they're similar. It's like it's taking away profits from the system, right? One way or another.
Yeah, we're managing the balance sheet.
Right, but with the surplus, I like to think of the surplus as pre-dilution of the MKR. So you could kind of hold on to the surplus today, or you can hold no surplus, and then when the time comes that you need it after a bad event, you can then dilute the MKR, right? So it's a timing issue of, do we want to essentially pre-dilute MKR, essentially by not burning it in the first place?
Yeah, Makerman writes a really good point in the chat. Dilution of MKR to cover DAI debts versus surplus DAI to cover DAI debt, to me, are vastly different things. One requires a market, the other doesn't. Yeah, so the advantage of using the surplus is you get around from actually selling or causing like downward price pressure on MKR.
Right. It's like the expenses to the system are denominated in DAI, so it would make sense to hold. What you might need to pay back in DAI, or you could hold it in MKR and then try to raise the DAI at the moment that you might need it going forward, which is just add some uncertainty. All right. Should we move on, Rich?
Yeah, sounds like an idea. I think Vishesh might be able to pick it up at this point. Any guesses on battery levels today?
All right,
43,
I'll go quick today and I'll explain why. Okay, cool. Can you hear me?
Yeah.
All right, so just real quick note, this Coinbase loves to do this, but they went on maintenance with their API at the exact moment the gov call starts. That's, I think, 2 or 3 times that that's happened now. But yeah, it's been fine for months and then just randomly today. So what I will touch on, so this was, I think this loaded prior to maintenance starting, so we can still talk about this, luckily. Yeah, so mid to low amount of DAI trading in the last 24 hours, slightly below peg, but I don't think enough to be concerned. It is worth noting that for a few days there was a bit more DAI trading below peg than above. Sometimes stablecoin.science is slightly visually misleading because of the size of the trades. So even though there may be more pink area below, there's large concentrations of trades happening above as well. So it more or less balances out, but still something to be cognizant of. A fair amount of that trading happening on DYDX actually. So that's also been an interesting note just since MCD launch that has picked up in share. And then Psy, there's been some funky trades kind of drifting below the peg on Uniswap, and obviously low volumes, but nothing too significant. It's all within tiny margins of error. So something to watch in terms of the amount of liquidity, and as those conversations progress around shutdown and taxes, not taxes, what happens with trading activity on Psy. This is something that's going to be interesting. But yeah, overall, so that borrow rate for Psy is about 10%. Supply rate, I think this was a slight bump as well. So that's interesting to just note on the secondary markets. But for DAI, this had also come up as well in terms of the supply rate and the total amount of lending activity with DAI. So that's also interesting to watch. Net, so that total amount of Psy plus DAI has increased, total amount of DAI has decreased, total amount of Psy is decreased, and total amount of DAI is increased. So that's migration proceeding. And it's actually really interesting. So this graph clarifies that. You see that the total Psy supply, though there are these like slight bumps, this was the one that Primosha talked about 2 weeks ago, there's net a continual decrease in the amount of Psy. So that barrel is emptying, however slowly that may be. And again, as has been mentioned since migration sort of started, people can debate about the pace and whether that's acceptable, but the trend is that that is continually moving downward. And DAI supply is continually increasing. And then the really interesting part is that the DAI supply is increasing at a rate that outpaces the amount of Psy decrease. So net, there's more DAI Psy in existence. And this is probably now we can actually say a reflection of sentiment for leverage, crypto markets, trading, etc. And it makes sense with what's been going on with prices. And I think maybe next time we'll circle back to having more of these discussions around what goes on with the ETH price, the amount of leverage that people are seeking. Just a quick note is proportionally, so you can just see that the amount of that DAI supply that is existing at lower collateralization ratios has increased again. So just proportionately, it does seem that there is more leverage seeking behavior, which tracks with the fact that more DAI size been issued. And pretty, I think, reasonably explainable with the fact that there's been a lot of trading activity with ETH and a lot of price movements in crypto in general. So it makes sense that there's a bit more bullishness coming into play with leverage seeking. And then just a quick note, I don't think this was mentioned today yet, but just the total amount of DAI in the DSR is up as well. So that's seeing pretty heavy utilization. And I think it's extremely significant to consider that out of 106 million DAI issued, there's 49 million in the DSR. And that savings rate of 7.75%, that's pretty high, I think, compared to what is out there in terms of rates for secondary lending.
I have a quick question about the DSR.
Yeah.
Okay,
Sure.
so if the utilization rate gets high enough and the DSR, the rate is high enough, is it possible that people cashing out their interest in exchange for like dollars, for example, would have maybe an outsized negative impact on the peg?
Outsized compared to what?
I mean, like if you have just a bunch of DAI being pooled there, and maybe like people are treating it like their other investments where they're making 7 but they're withdrawing 3%, and they're converting that DAI into US dollars, doesn't that basically create like a very steady selling pressure on the open markets if they're not doing it OTC?
Well, I would say conceptually that makes sense. I don't know if that in practice is how it hits the order books.
Okay.
But the flip side, right? So that would be a balanced effect. The flip side of it is when you absorb DAI into, and that's only if the immediately follows into this sort of cashing out activity, which again, hard to say if people are necessarily exchanging DAI for US dollars in that way. That's something where we could then go back and look at, for example, some of well-known off-ramps and try to understand what's going on there.
Okay.
And I think it is worthwhile to sort of look at, like, for example, Coinbase order books and centralized exchanges and see what kind of information we can get. Unfortunately, down at the moment again, as I mentioned, but the flip side of that, right, is when DAI is being locked into the DSR, it's theoretically being taken off the market and reducing selling pressure. So probably so, yes, I think what you're saying is probably not inaccurate.
But it's balanced out.
A likely potential outcome, but right, it's balanced out. So this is where I think some refined thought is required in terms of how you think of the DSR as a lever and what is the impact of the DSR. And it's not simple by any stretch, but
so
it
technically
is,
we can infer something if we see that the DSR is growing over time, or like, let's say over the course of like a couple of weeks, it's actually shrinking over time despite like our rate setting. That in and of itself can be like a really important thing to consider when looking at the health.
100%. Yeah, I think the utilization of the DSR, even in just aggregate terms, like how much is in the DSR, but that utilization rate for sure, I think is an important data point. I think we could have a discussion around what it means and how to interpret that data point. Because again, my point is that's not necessarily super simple. Like, for example, you could say that if more DAI is being locked up in the DSR, that reflects some sort of risk-averse yield-seeking behavior, in the sense that people, instead of leveraging up, would seek to go and find a quote-unquote safer source of yield, and that's one potential interpretation. Another could be that, you know, it's a temporary risk shelter, and those people are sort of waiting for the right price, etc. And like, there's a lot of different ways to interpret it, is my point.
Yeah, there's a ton of different user behavior. Yeah, you'd have to go into like the on-chain data and kind of see if people are cashing out at like a minimum, beyond all the other stuff. Yeah, I hear you. It's complicated.
It's a very good point. Yeah, it's a very good point. I think what's really important to consider is not the DSR as a standalone, but as a linked behavior. What's happening prior to that DAI getting into the DSR? Is it being minted simply for the purpose of locking up in the DSR? And then subsequently, what's happening when that DAI leaves the DSR? Are people going and cashing out for US dollars, et cetera? Like, those types of linked behaviors really tell you the most. Okay, but that is what I have at the moment.
There's some activity in the sidebars or questions that people need to ask.
Makerman said, in regards to the conversation we were just having, this discussion is one of the many reasons why I have been advocating paying a fixed percentage of the stability fees generated, to have the DSR pay rate be connected to utilization. Then both utilization and rate can fluctuate with the markets. Yeah, I'm trying to wrap my head around that.
I'm curious about Sam's comment, and if you can clarify.
I'd like to move some of the sidebar conversations into the chat. So like Sam or
you can't talk on the mic, but Sam was saying that oh, there you go.
Can you hear me?
Yes.
Yep.
I have terrible cell service here, so I will walk around. But no, I mean, I've been listening to this discussion on this, and it's one of the reasons why I've been trying to get Maker to move towards doing a rate-based utilization model. You know, so that if people are really pounding into the DSR, the rate should go down a little bit. If they're out of it, the rate should go up a little bit. And if you just do a fixed rate of the SF fees, then everybody's really clear on how much money is going where, and the rates can kind of move based on how the markets dictate it. To me, it's pretty straightforward. So, and I wanted to say hi to everybody and apologize that I'm using a phone and first time I can talk to you. So
we could hear you really well, so don't worry.
Thank you, David. That's all I have to say.
Isn't the variance of the utilization rate expected to decrease dramatically over time? I kind of agree with Sam's comment where he says its relevance as a number is temporary. This shouldn't be a rate that just jumps around.
Yeah, but is it
like
temporary? But is it temporary? Like, when does it become temporary? In 5 years? In 10 years? You know, it could be very relevant for the next 5 years.
Well, the rate effectively isn't going to jump around unless you have huge moves into or out of it, or that governance decides we're going to go from 50% of the DSR to like 80, and then you'll get a kind of big rate fluctuation depending on how the things are moving. It's like the markets move radically at times, and the rates actually move pretty radically. And I think in some ways it's good to have these things be able to fluctuate with them. When they don't, it means behavior starts to fluctuate, and you really want to moderate behavior and kind of let the rates move. I mean, I have an example of a control system thing where it was like the difference between a thing operating and going wildly all over the map versus applying a regulation model that absolutely fixed the thing that I wanted to manage and let this other thing go all over the map. It's the difference between those two. It's like, what do you want to have go all over the map, the rate or the behavior? And I'm kind of would like to see the rate move more than the behavior.
So I think that there's actually some like mathematical merit to that point, which is the sense that if you take this assumption, which I think is a lot of people have really been buying into, that dye will be minted and burned to reflect a desire to chase yield in the DSR, and that the DSR will actually be a driver of demand. If you accept that assumption, then the dye supply would fluctuate like effectively as a function of utilization of the DSR in terms of like what that rate is versus the actual demand out there for that yield. So in the sense that if you assume that that demand is fluctuating wildly, which I think is pretty reasonable based on how SCD worked and what a lot of people's behaviors have been in the secondary lending market in crypto, then what's going to happen, or what would have to happen mathematically, is that if those rates are pretty fixed, then your supply is going to fluctuate more wildly. If those rates are more variable, then the growth of that supply based on that fluctuating demand would happen more predictably. And so it's a choice. And I think there's a good point there that you kind of have to choose between that behavior fluctuating wildly versus the rate fluctuating wildly. I think that makes a lot of sense.
Yeah, this is fascinating.
I mean, I don't want to belabor this. We can keep this meeting short because a lot of the stuff we can do asynchronously in either the forums or in chat, kind of. And so I think we're kind of on the same page here. So I'm going to hand it back to a move along or something next. Good. I love the state of the peg, by the way, Vishesh. And I'm going to make one comment on the pegs. I've made it in the groups elsewhere, and I see it on the data, is that the peg tends to be a low. I would like to see it fluctuate equally above and below 1. And the one thing that there's two things we don't take into account that I think we should think about. One is, what is the actual liquidity depth for price? And shoot, the other one just totally slipped out of my head. So I'll leave it till that comes back. It's just, I think the peg's too low, or a little bit low. I don't think we have to do anything that it's inherently in a decent range. Oh, the other thing is the fees involved. Is that anybody trying to arbitrage these peg rates now have to deal with pretty significant fees. I mean, you're talking a round trip is anywhere from 0.2% to over 1%. And so you got to expect a fair amount of fluctuation just based on the fees involved to arb it. And that's going to give you this fluctuation. And it's just, I would just like to see it be fluctuating more equally around 1 rather than below it. But that's just my preference, and other people can disagree.
I think Vishesh said something really interesting last week to your point, MakerMan, about that variance. I'm trying to look for it in the summary because I managed to capture the sentence really well, but it was something along the lines of, although it may be it's a really small variance, right? So I think that it is a result of the fact that there's a cost to do the arb, and like the fact that it might be a little bit lower is still should be considered a healthy peg and shouldn't necessarily warrant like a rate adjustment based on that. So I think maybe like the next step for our community or like the people doing risk is to like define what really is like a reasonable range before we should consider rate adjustments.
So two things that are not, sorry, two things that are not new conversations in any stretch. I think I remember this conversation from probably like February of last year, was A, are those rate adjustments necessarily going to impact price? And B, is there a necessary or inherent asymmetry in price movements and fluctuations above and below peg? And there have been a lot of reasons why I think there would be necessary economic asymmetries above and below $1 for DAI. And that was much more so true in Psi, but I think some of those points do still hold. And then the flip side of just, are you necessarily even going to be able to ever force DAI to trade at $1 instead of 998, or are you ever going to force it to be able to be at $0.002 instead of 998? And like, what is the inherent nature of those fluctuations, and what's sort of the resting state? And I think this was probably very incendiary in some posts where people were talking about the extreme version of what I'm saying, in the sense that they were calling the peg not at $1, right? So there were people that were going around saying that well, the peg for DAI is actually, you know, a hair below $1, and that's the resting state. And so the point around, is DAI necessarily going to fluctuate evenly above and below $1, and should you try to manage to that goal, is A, not new, and B, I don't think it was ever really resolved. But my sense would be it's probably never going to be perfectly balanced.
Good points, Vishesh. Appreciate discussion with you as always. What was I going to say about this? So one of the things I'll say is I looked historically at a lot of this. I wanted to put together data. It's one of the reasons why I wanted the peg data from you. Is that, to me, it looks like what we have is a system that is kind of on a growth path. I mean, literally, it wasn't until you guys hit 16 to 20%, and that the markets started to, you know, things started to drop and the peg started to rise pretty significantly. And everything I'm seeing is it looks like there's a high demand for DAI, that we can grow the system, no problem. I see it as an average of about 500,000 a day of outstanding DAI as it stands right now, with the rates at 8%. And so I think inherently what we're seeing when we see the peg sag a little bit is what we're seeing is a system that wants to grow. And so there's kind of a downward selling pressure from all the people minting to do that. And I've been trying to get a feeling for what the liquidity depths are here, because it isn't just where the peg is. It's like, what's the real liquidity depth on these markets? How much can be sold before the peg drops X, you know? So I agree with you in general that I think we're within spec. I just say it's a down a little bit. I think we'll end up raising rates at some point. There's a reason why I want to see the DSR above 8%, and that's in my post. So I think it's going to start pulling money over from everywhere else. Anything over 8% is going to pull every piece of SAI that will go to the carrot reward into the system or out of the system. And then we're left with the CDP holders that we just have to figure out how to encourage. But in general, I agree with you. And those are kind of, it's my feeling on the peg is just the way it's operating is in relation to liquidity generation. So that's all I have to say.
Well, there's another point, which is, so there's 25 million DAI being supplied on Compound. And that is currently chasing a rate of 7.8%, which is just a hair above the DSR rate. So that's like, those are two things that are really important to be cognizant of. And like, I mentioned this a few weeks ago, like DSR rate like does not exist in a silo. And it's actually all about what that DSR value is compared to what's everything else that is available out there. And so if that DSR were to come up, say 0.5%, I think suddenly the incentives are now for a tremendous amount of a pool of 25 million to race to chase that rate until an amount of that 25 million empties out that drives, based on Compound's utilization formulas, up, increasing that rate. And so now you sort of would achieve this steady state. And so I don't know well, Compound DAI is already in the DSR, yes, but if people are supplying DAI directly to the DSR versus the Compound supply pool, right, those should work economically differently. I'm curious, Iris, if you have thoughts on that.
I mean, if the Compound rate is tracking DSR because the Compound DAI is in the DSR, right? So if the DSR went up to 8%, then yeah, there would be kind of a reallocation, but it would be, I think it would take very little to push the Compound rate back up to just 8 and some change.
I agree.
Right?
That's kind of my point, is it would quickly level out for sure.
But I mean, I think the
But
dynamics have reversed from last year, right? Last year, the compound rate was set somewhat independently of the stability fee, because it was kind of there were some, because of inefficiencies with the Maker protocol and the lack of the DSR. But I think now,
well, this is fundamentally different from that because sorry, this is fundamentally different from that because at that point that was the only supply sink, and so what you were really talking about there was the amount being minted versus the amount being borrowed from compound, and no doubt like the amount being borrowed does have an impact on utilization on compound. But I guess my point is, in the event that the DSR were higher, so like in your example, let's say it was 8%, theoretically now some people would withdraw DAI from compound, reducing the supply utilization on compound, increasing effectively the amount of, yeah, it depends how you think about that. But the point is, the DSR utilization would go up, DSR rate would not be impacted. But the compound supply rate would theoretically then go up, right? Because the amount being supplied on compound would go down. So those would theoretically kind of level out. The question is, how dynamic is the DSR, or should the DSR be? Because if you're trying to manage the amount of secondary lending supply on compound versus in the DSR, if you care about that value, then how you set those rates does matter.
I think the effect is that that kind of back and forth doesn't affect the DAI peg, right? Because that doesn't affect any fresh, like outside capital coming into the DSR. But the existence of compound allows kind of additional liquidity for people locking up DAI, such that the DSR doesn't have to go as high as it normally otherwise would have, right? So like without compound, the DSR might be significantly higher, but with compound, it kind of absorbs more of that demand for locking up DAI.
Well, it's a trade-off, right? Because if there is less being supplied on compound, then theoretically it's more expensive to borrow from compound, which theoretically then puts less DAI on the streets at the end of the day. But if you are putting DAI into the DSR, it theoretically has no impact on the amount of liquidity out there, the amount of DAI that's just floating. So it theoretically has no price impact. So I guess that's the difference. But then the trade-off is there's also a cost, right, associated with maintaining the DSR. So it's a choice. It's a style choice.
All right.
I don't know, guys. I'm listening to this, and I think since compound is matched rates, this is kind of a non-event with respect to compound. I mean, we talk about the rest of the markets because I have Psi in Nexio at 8%, been there until, who knows, till they start to do DAI, honestly. But this whole idea of like the purpose, why do people have DAI in compound? It's because they can borrow other assets against it, whereas they can't do that in Maker. They can do it in other markets. And so I think you're talking about an interest rate arbitrage opportunity, which really doesn't exist between compound and Maker. I mean, nobody's going to do anything for 0.1%. We've already seen that. And there are other reasons why people have their money either to earn the return or to be able to borrow against it. And right now, the only thing you can borrow to, we can only make DAI if you put S on Maker or, assets on Maker to mint DAI. And so what's out there is determined by how much Maker mints, and then how it floats around in the system. Yeah, it's definitely determined by the secondary markets and rates. But since compound is basically pegged and some other places are starting to peg, I mean, this becomes a non-issue. The real, I was talking about the size stuff in particular, but we're talking about the peg. I don't think how these markets are moving with respect to that. I don't see it having an adverse effect. What I do see is that it sopped up a ton of liquidity. And so literally there's, I didn't look at the numbers on compound, but the amount of stuff deposited, it's like half the maker is under deposit right now, and it's still growing. And so that's the real issue, is kind of how it's affecting liquidity, because liquidity I see affects peg. And so that's kind of all I have to say on that.
That feels like a valuable discussion. I think that we should probably continue the debate, though. We're running out of time. It's the top of the hour, and I don't want to put off LongForWisdom much longer. You can get grumpy. So long. Do you want to take us through governance at a glance, and then special thread segment?
Yeah, I can do. All right, so been a couple of active discussions this week. A couple of cool things that have shown up. First of those was a post from Mitoto, which summarized some academic writing related to organizational management. So academic work that's been done describing how like companies work, or like how people most optimally work together. So there's potentially a lot of valuable things to glean from that. I think Mitoto was within this call, so if he wants to discuss it a little bit, feel free.
Oh, hey, yeah, I just stepped away for a second. Which post were you mentioning?
The one with the summary of like organizational management.
Oh yeah. So I spent the last week or two kind of just doing some academic reading, just stuff on Google about organizational management, some of the older, some of the newer thoughts on that, and just tried to summarize in the context of Maker and some of the questions we have about like the various groups that are doing work and how they communicate and share information, and how to do that in the context of like the goal of the organization.
What were some of your main takeaways from the research?
Okay, I'd say so for coordination, generally, it sounds like we have to consider the interdependence and the uncertainty of tasks that people have to do for work. And those have various definitions along them, and those like characteristics of the tasks informs what sort of coordination like works best in the organization. So kind of just looking at that a little bit. I wouldn't say I had any like major takeaways exactly. The paper on meta organization was also really interesting because they were looking at, it was one of the newer studies looking at systems, like basically like how to describe open source and sort of non-traditional company organization or large organization structures when like all the actors in the organization are legally autonomous and don't like have an employee-employer relationship with the whole organization. So I kind of just got into the surface of it. I wouldn't say there's any main takeaways yet, because there's a lot of variations with how we work, and like blockchain governance stuff isn't exactly like represented in the academic literature. So it's sort of a great space.
So do you feel that like this will get the community closer to a way to self-organize because I've spoken about this in the past, that we have the Maker Foundation. It's very clearly delineated where that begins and where that ends. And then we have everything that's not us is MakerDAO. And that's about as fuzzy a definition as you can possibly get to, right? So is this going to get the community closer to having some kind of identifiable unit and structure that the foundation can interact with?
I think so, because like we ultimately need to figure out how to do the tasks that the foundation is doing for the community right now, like all the stuff you do, all the stuff Cyrus does, and legal and all, who knows what like goes on behind there. So this stuff would basically be like, how do we think about the infrastructure to make that happen in the context of like governance, because we have to vote on all these things and like ratify stuff and like coordinate all this information. If we know how to coordinate that information effectively, we can like try to self-organize into like in a way that's transparent, because then there's the whole global question too, and all different cultures and how to like transmit information and stuff. So there's a lot.
Did you run across any information or any references to just traditional co-op models? Because it feels like that kind of closely aligns with what DAOs are, right?
I didn't look at that, but I didn't do like a super exhaustive search or anything. I'll look into that.
That's interesting. All right, thanks for that.
No problem.
Cool. So continue with active discussions. So we had a new member on the forum ask about the BAT stability fee and whether it should be reduced, which prompted some discussion over sort of how to judge the stability fees of other assets, and like comparing the amount of the asset locked compared to the market cap of that asset and things. Some discussion there about how to judge questions of that nature, I guess, which was cool. We also had a post from Cyrus discussing lowering the PSI debt ceiling to 30 million and lowering like the target buffer, which is what I'm calling like the amount of overhead I guess we want to have in the debt ceiling, lowering that to 5 million going forwards. There's an on-chain poll up for that, which I believe is finished. I think was successful. So if you wanted to,
I mean, maybe that kind of just bridges into the next conversation on tax, but
yeah,
I think lowering the side debt ceiling until we get some increased clarity around emergency shutdown is the prudent course of action. There's nothing in particular that, I mean, there's no like severe attack vector or anything that I'm aware of, but just from a perspective of not arbitrarily leaving about 20 million of empty debt ceiling room for PSI seems like a good idea.
Yeah.
And there are some questions about should it be reduced to even below the current PSI supply to completely cut off new PSI minting. I don't think that's really it's that serious of an issue that we need to kind of completely cut off all additional PSI issuance, but it's kind of depends what happens with the emergency shutdown discussion, to be honest.
Cool.
Yeah, so the reason that we were talking about needing to lower the debt ceiling to 0 to initiate this poll is because if the poll scenario won out where we would not implement a tax at all, there would be an incentive to max out the PSI debt ceiling, migrate that PSI, and put it in the DSR and wait for emergency shutdown. Because then you pay 0 interest on that, and you're getting a return from the DSR. So that was the concern with that.
Yeah, exactly. The reason I was saying it, I don't think it's that huge deal. I mean, it depends on perspective, but this additional risk would be for the PET holders, and yeah, I mean, I think leaving a little bit of space to kind of enable the regular economic activity of PSI is good idea, but to limit even just the tiniest amount of extra PSI doesn't really seem like you're reducing, that you're not actually mitigating too much risk for SCD as far as I'm concerned. So it seems like overly restrictive for minimal benefit.
Would a sensible first step, I've been thinking about this and I'm curious to hear your thoughts, would a sensible first step towards the global settlement of single collateral DAI be maybe setting a date to close out the migration contract first before even settling tax or settling any of that? Yeah, just curious on your thoughts on that.
I'm not sure if that's going to be like, I just don't think it's a super important factor. I mean, there's always other ways to go from SAI to DAI, right? Just by,
Yeah, but the migration contract, if it's there and it's open, then game theoretically it gives people like a really easy way to get into DAI.
I mean, presumably if there's going to be a date for emergency shutdown, wouldn't you want to give people an opportunity to migrate up till that date? Like having a separate earlier date to cut off the migration contract, what would that achieve?
It would give us the chance to maybe sidestep the stability fees and the tax question, but yeah, I don't know. I'm thinking out loud. But I figured that it would be good because that would push people kind of as a first step to like, okay, like you should migrate by this date, and then after this date, you will either have to close out your position by getting SAI on the open market to close it out, or by, you know, or you're gonna have to like sit through the tax thing, and like, I don't know. I'm just trying to think of the order of operations that like game theoretically makes sense.
Why don't we set some context first? Because I feel like LongForWisdom was just about to get into that thread, if I'm not mistaken, with like a summary of sorts. Maybe that would be helpful first.
Yeah, we can do that first. Cool. Yeah. So the people who've spoken in this thread, feel free to like interrupt me at any point if they want to like summarize their own sections, because otherwise it's just me talking. But I'll start off with like sort of Aaron's initial post. So Aaron kind of just kicked off the discussion, proposed some questions to think about before. Right. So actually, when this thread was first created, Aaron included a signaling poll, which was, you know, do you think we should implement the tax? Yes or no, basically. We discussed, and in the end, Aaron decided to remove this because of the issue that was just mentioned, where if we all vote, if it's really obvious on that poll that we're not implementing a tax, then if the side debt ceiling isn't limited, then there's an incentive to mint SAI and lock it in the DSR to. So on the basis of that, Aaron removed the poll after discussion with like Sam. Cool. So after that had gone up, we had some discussion from various people. So what was it? Sam discussed how it wasn't just a way to recoup maker fees, it's also a way to prevent abuse of the system. Yes, that was essentially that discussion. I laid out a whole bunch of arguments as to why I thought the tax was a bad idea, which I will summarize briefly. My first argument was mainly that if we implement the tax as Nick originally described, which is to set a high tax at the end of the just before shutdown to incentivize people to pay back beforehand, then because there will always be some set of CDP holders that don't migrate for whatever reason, we will be punishing these people, but we'll be charging these people more than they would have paid a certain subset of these people. And my argument was essentially that we should, like, under no circumstances should we charge people more than they should have paid, right? Like that's a big no-no in my opinion. So that was the first point. Secondly was the point that if we sort of put a big threatening tax, say there's going to be a big threatening tax at the end, then it incentivizes everyone to migrate as soon as possible, which has the risk of causing a liquidity crunch on SAI. The likelihood of this, maybe Cyrus can speak more to, but I'll continue summarizing now. So my third point was on optics, in that if we sort of add a tax and we're charging people, then it's just difficult to explain to the system generally, because we have to explain why the stability fee doesn't work. We have to explain why the tax is replacing it. We have to explain why we're charging more on the tax than, or why we appear to be charging more on the tax than the stability fee. We have to explain the game theoretical nature of the tax, and that it's more of a stick and not something that most people will end up paying. It just a lot of kind of confusing things to explain, and it's quite a highly charged word in tax that people won't like. So that's arguments. And then some other sort of smaller arguments, which are sort of just sort of generally, if we inflict this on certain CDP holders, then they're potentially not going to use the system, not be as inclined to use the system in the future. Yes, I think that's probably the summary of my points there. So myself and Sweka had some exchanges, just sort of talking about the same thing. Points. Let's see.
And Aaron had a nice summary of the various options down.
Yeah, so I'm
towards the
getting
middle
to it,
too.
yeah.
I was just about actually to call, and he's in the call actually. Aaron, if you have access to a microphone, you can also feel free to jump in. We don't need to read out your words for you. But if not, LongForWisdom can pick it up.
Yeah, he previously hasn't, but yeah, Aaron, if you do, to interrupt. Cool. So yeah, a couple of people asked. So at this point, we're only reducing the SI debt ceiling to 45 million. So there's some discussion over whether we can move it lower, which we now have based on Cyrus's points. So we're going to 30 more. Yeah, so stuff. Yeah. So then coming down to Aaron's shutdown options. So there's a couple of these, which maybe Aaron, I would kind of prefer Aaron to summarize. Maybe Sam wants to summarize some of them. Sam can talk.
I can do it. Can you hear me?
Yeah.
You can hear me?
I can hear you.
Okay, cool. Yeah, so I think I boiled it down to pretty much 5 main options. I'd had the 5, and then after I had the 5, I also have MakerMan has a good one as well. But the first one was essentially all of the polls that I did originally. Those were kind of a summation of the first proposal, which was our initial 6 months time 10 million supply threshold, and then a 5-cent peg deviation. So that was kind of like we have to lower the DC, the debt ceiling for that, because essentially we wouldn't be having a tax, so people could just mint freely and migrate over to the DSR. So the main pros and cons of this proposal were that we communicate essentially, okay, these are the parameters that the community, that if any of these parameters are hit, then we're going to initiate global settlement. So the community then understands, okay, we have to watch out for these thresholds being met, and we know how long we have to migrate. And then so one of the cons, I guess you could say, would be that maker holders gain to lose the most potential stability fees. If we don't implement a tax, then there's no incentive for people to migrate or pay their stability fees if they can just wait till the end. Which I say there, and then no new SI can be minted because we've lowered the debt ceiling, so we'd have possible liquidity issues there, and that might actually accelerate the peg deviation if there are. It's hard to tell though, but it's definitely an argument. And then the second proposal was to, I think, was more alluding to Derek's posts, but the swapping the fee for tax, and then, sorry, do you want to, LongForWisdom, can you explain this one for me?
Sure. Cool. So
I can do it too.
Sam, yeah.
Oh yeah. This was Sam's, wasn't it? Yeah. So all Sam's suggestions. So yeah, go ahead, Sam.
Yeah. So the idea behind this one is, instead of instituting a tax at the very end that's like extremely harsh, we just swap the fee for the tax and vote on it just like the stability fee. Yeah, so it would be shut down in 6 months as well. So this would basically be forgiving the debt. Say you're a CDP that's planning on holding your position until emergency shutdown. This would forgive your debt right up to this point, but you would still have to pay debt for this point forward, which would get rid of that issue with having to move the debt ceiling to 0 to prevent abuse. So that was the idea behind this one. Yep, that's basically it.
What are the pros and cons of doing that?
Let's see. So pros, we don't have to lower the debt ceiling. That's a pretty big one in my view. Cons is that maker holders again lose out on some of the fees to be collected from CDP owners. There is also another con in the game theory sense in that once this tax is activated, CDP owners will be incentivized to hold their position until emergency shutdown. So it's similar to the one where we institute a tax at the end. But oh yeah, here's another pro from that scenario where we do the tax at the end. So the pro with this one is it's completely fair. If we do a harsh tax at the end, there could be a scenario where somebody opens a CDP with 1 month to go, and then oops, they get hit with that very harsh tax at the end, completely unfair to the time that they've had their CDP open. So the tax at the end penalizes everybody potentially very harshly to some. And this one is sort of a more fair distribution of the tax. I think that's all the pros and cons.
I will just point out it's not like completely fair, because you still have people that have accrued less or more stability fees so far, and if those people were to pay the tax, then it would be fairer for one of them than the other one, if that makes sense.
It's only it's fair going forward. It's beneficial to CDP owners who have open positions as of right now. So it's unfair in that sense, but anybody opening a CDP position with once we switch to the tax, it will be fair moving forward.
Yeah, that sounds right.
So I know we've essentially talked about the flash tax at the end. We had that at the last governance call, and then Sam talked about just starting a tax now as opposed to at the end, but then you just talked about the pros and cons, and it's like I kind of thought of a middle of the road kind of hybrid solution to that, which would be you have a spiritual imaginary swap right now, and then you flash tax at the end, so you're still accruing stability fees at the same rate now, but then someone's actually just keeping track of what the stability fees are from this point on, and then they add it all together at the very end, and then that's what you make the tax calculation be, so that anyone from this point that opens the CDP knows that they are all evenly paying the same tax at the end. And so you can still, but then that allows maker holders to have to maximize the amount that they could potentially burn. So that I think if maker holders want to see the most revenue from that, then that would be a good compromise.
One downside to that one is that it becomes not fair. The distribution of the tax at the end is not fair because people may open and close CDPs within that period.
Right. Yes. So the difficulty with that proposal is that there's no way to make every single person in the community aware that that is what's happening. So you can, shout from the hilltops as much as you can to try and let people know. But yeah, it's hard to engineer a system with these assumptions, because not everyone, people have CDPs that they go away for 6 months and they don't know what's happening, they don't follow what's happening, and then they come back and then they're going to see what the heck's going on here, right? So yeah, it's that one's definitely a communication heavy solution. And then I think that's not going to the final one. That's just like maximum chaos solution, which is just lower the debt ceiling. And then we continue to manage the system effectively for 6 months because we kind of don't want to leave everyone high and dry. We communicate that, okay, we're gonna you know, keep managing the system till X date, and then we're just gonna stop, and then the system's gonna do whatever it does, and then you know, say 6 months even later down the road, if it's like collapsed and it's not our problem anymore, we kind of washed our hands. We let everyone know that this is what was going to happen, and everyone's on their own. But then, you know, we can kind of move on to different things, not have to worry about it. And then like we see, oh, okay, you know, it's got like 5 million psi in there, and the peg's like 10 cents off or whatever. Maybe we can shut it down now. But yeah, now thinking about that is like, you know, yeah, I don't know. That's definitely an interesting option. And then Long, did you want to talk about, or MakerMan, do you want to talk about your post that you did today?
I'd love to. I think the more I looked at it and the more I thought about it, this was a post I made a long time ago or tried to talk about and was shot down so horribly. But when I saw the alternatives, I was just like, we got to do something better. So here's the deal. When I look at this from a game theoretic standpoint on the players, okay, that basically it's the CDP holders that we're trying to figure out here. And I have an issue with all the people who closed before and paid their fees sitting here and looking at, oh, we're going to forgive the tax. And before I can hear the uproar, oh my God, the tax or the fee, whatever you want to call it for PR purposes, I don't care. If you look at my post, I think what we should do is kind of what I suggested. Lower the DC. I agree with Cyrus and other people. We need that to be as tight as possible so people can't just get a free loan for a while and get out. But here's the caveat on this. In my model, I want to have a time frame. I want to have a condition. And my condition is the conditions put forward. Below 10 million or around there, 0.5% on the peg, up or down. And then basically, if 6 months or more pass, those are all the conditions where the shutdown can happen at any time. And I want all the people trying to game this to sit there and go, I don't have a date. If I'm trying to pull that side loan for free interest or whatever, I got a hazard, a shutdown that could levy a tax that's going to be determined at the time, not before the time. And I want that tax to actually equal the total of stability fees plus some penalty percent. I want it to be a hazard that's growing for the CDP holders with an increasing SF that's consistent. Every week it goes up 0.5%, so that if the sooner they get out, the less fees they're going to pay and the less penalty they could face at the end, to kind of put the fear of God into them. These people who borrow money, I'm one of them. You know, and I borrow money. I pay attention when I borrow a lot of money. We have one holder who basically has, 40% of the outstanding or whatever that has a huge amount of fees. And so anybody new that wants to play this game is going to have to face this risk, and all the old holders aren't going to get out free. And that does a few things. You still get some liquidity to manage the markets. I think the peg is still good throughout all of this. It puts the risk hazard in an unknown time frame because the shutdown could happen as a condition, and I want to make it so that none of the exact details other than we're going to do a tax that is equal to or above the total fees owed, not because Maker needs money, but because we need to properly incentivize the group. Anybody who fails that test and doesn't close out, then they get what they get, which is whatever they get and whatever we decide. But I do not want to advertise to everybody what's going to happen. What I do want to advertise to SI holders is the peg can go up or down. And if you're gaming that, then good luck to you, because you can face 5% fluctuations if you need to go, whatever. And the CDP holders, they get massive, an increasing sort of idea that, oh shoot, this is really going to cost me not just the money I owe now, but more money I'm going to owe, and then possibly a tax if I wait this out. And that's I call that a semi-bluff. Because me, I don't understand the system in detail. I can't go through all this and figure out all this stuff. And I bet there's a lot of people out there that can't either. And so the idea that someone's going to go through and game theoretic this with the limited amount of data my proposal gives them, the PSI holders, the CDP holders, good luck to them. And basically throw that out. And my only other suggestion is I'd like to see the DSR go a little higher because I want to pull all money out of everywhere else. I want to extend the carrot to PSI holders looking for return, get them to move and be clear that they've all moved. Anybody else in that game after that, done. And the CDP holders, it's like, look, you are going to pay one way or another. And who gets hurt more or less in fairness? People are gaming this, and so when it comes to fairness, I play poker. It's like you want to put your money in the pot. All right, take the risk. I hope you have a good hand, you know. And so, and Maker's been very clear that there's a possibility in shutdown that there can be a fee or a tax or whatever, you know, that you do have to pay fees. I mean, there's nothing about this that didn't go out to everybody who's taken these loans. Now, how the fees would be paid, okay, when you close your loan, blah blah blah, but you know, read through my proposal, sit back and digest it a little bit, and remember that I'm trying to make this more opaque or more transparent in some ways in terms of the conditions, but much more opaque for a game theoretical in terms of when it's going to happen and the exact details of the tax, other than it will be equal or more, or at least that's the intent of it, to really tell the CDP holders, you're not getting away here. And it's not because we're greedy, it's because we need to properly incentivize all players. And so I just encourage you to read it, think about it, and we can go from there. So it's kind of all I have to say on my proposal there. But I think it's cleaner from a game theoretic and everything that can happen, because when you put it on as a condition thing, then it's like nobody knows when it's going to happen. What they will know is when the conditions are met, it can happen at any time. And that's when the markets are going to move. And if the PSI minters want to like push the debt limit right to the limit, like if we go to 26 million, leave 1 million out, 4% of the 25, if they want to push that up to that, then they're the ones that are actually causing this to happen. And it's on them. And you could go, well, we're supposed to manage this. No, we've made it very clear what we want to happen and the implications of what we're going to do if this thing goes out of range, and just be done with it. And in that fashion, just let it run. I think we're coming down really well. I'm very happy with how the migrations went. It's actually, the more I looked at it and looked at my going way better than I thought, with the kind of stick and the carrots. You know, it's good. So I'm going to stick with that and let you guys think about it. But that's kind of my pitch on my proposals. I think it's clean and good, and it pretty much puts everybody in the right right position or with the right incentives for this end game that's coming up. So that's it.
I just want to say, I think your proposal, MakerMan, is the same as the one that Nick was proposing as well.
Okay, I don't care who does it. I remember I was doing this early on, but it doesn't matter how we get here.
Just to connect them
I appreciate
for
all
others
effort.
listening.
Okay.
I think Nick's did differ in that Nick was very much a proponent of making the comms like exceptionally clear, right? He was saying it's a comms problem. We want you to explain to everyone what's going to happen. Whereas I think MakerMan's is different in that respect, right?
Right. Yeah.
Yeah, I'm kind of saying you only say the basic minimum of what's going to happen or the conditions for things to happen, because then it gives the gamers less information to game this out and to know exactly what's going to happen, because we don't want them to know exactly. You kind of do want them to know because they're your users, but how long do you say, look, we want you guys to migrate? You know, I think we're going to be stuck with CDP 3088. And that'll be the vast majority of the fees that we're looking at. And so anybody else in there it's not going to be a lot. We're going to be under 20 million here pretty quick, depending, I think, in the next month for sure, would be my guess, unless something wacky happens. So.
Yeah, I like this idea of uncertainty as sort of a mechanism to keep people from gaming the system. I think it's one of the main reasons we're not seeing this sort of behavior right now, is just because it's up in the air.
All right, well, I'm hesitant to end such a good discussion, but we are an hour and a half in, and people have schedules, and people are getting mad at me in another meeting right now. So thanks, MakerMan. Thanks for getting on the phone. I'm looking forward to hearing more from you. So if you need, hit me up and I'll send you a microphone so we can get this happening regularly. Thanks to everybody else for continuing the discussion. Mariano, Vishesh, LongForWisdom, that was all great. Thanks, Sam. And anybody who I might have forgotten, I should never start listing out names because I always forget somebody. But there we go. Let's continue this discussion. The shutdown and the what do we do about outstanding fees is going to be one of the biggest decisions the ecosystem or the community needs to make. Yeah, maybe of all time, actually. It could be a big one. So it's worthy of discussion. So let's continue this thread in the forum. Let's continue this discussion next week, and let's get closer to the optimal solution. All right, thanks, everybody. See you next week.